morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar, coming to you live from New York City, baby. This is video number 567, and of course, they're just going to keep coming at you. Traders, I'm doing this video on Tuesday night for Trading Wednesday. That would be March 31st, 2010. I will say this is a holiday week and a big biggie, like I said in my last video, because at the end of this week, you got just about every sect on the planet celebrating, right? So lots and lots of people take this week to go to their Pocono houses or go to their Florida houses or go wherever it is that they go in their country. You know, it's a lot of vacationing, a lot of families get seen during this time, and what does happen is traders start fleeing for the exits, especially by Wednesday. Most of the bigger traders are done. They go on vacation. They take a few days off. That means markets are expected to be very thin and choppy for the rest of this week. Be careful out there, traders. It's a holiday week. Happy holidays and all that good stuff. And hey, it's going to be a great one. But if you're going to trade for the rest of this week, you got to be really careful. You got to make sure your stops are in. And in all honesty, the analysis that I've looked at this evening in the indices, the U.S. indice markets, was completely confusing. Same thing in the currencies. Then I went and looked at the grains and thought, wow, even that looks confusing. So what I'm noticing is in the technical analysis, the holiday week seems to be coming right out because the formations I'm seeing on the charts are not in sync with indicators, and the way markets are moving are not in sync with the formations. It's a big mess out there if you're an analyst, and that does make sense for this holiday week. So heed the warning. Try not to trade past Wednesday. For Wednesday, by the way, traders, we think T-bonds are going to take a little elevator ride to the upside. We're not looking for an explosion by any means, but we think if we buy pullbacks in bonds for Wednesday, we may have a decent trade. And I'm about to show you two charts, and only two charts in this video, and they will be of bonds and of the Dow Jones Transportation Average. Traders, while this week is taking place, you know, we call it the reversal week, the holiday mundane week that you don't know what's going to happen. Volatility can either be extreme or nothing, right? You get choppiness or nothing during this week. Well, I've noticed in the transportation average is a very nice looking bull flag forming this week. And if it continues to form for the rest of the week, well, hey, next week we got a blowout coming in the transportation average out of the bull flag, and the transportation average's indicators are becoming bullish as well. So a great week for a bull flag to be being built, right? A nice slow week. This is what we want. So with no further ado, traders, let me show you some charts. Okay, traders, you're looking at the 30-year T-bond chart. This is the June daily bar chart. As you can see, we've been in this parallel channel on the way down. Well, this is a holiday reversal week, or expected reversal week, right, leading into the holiday. Monday, we've already had a big up day. Tuesday, this evening, we've opened up here, which is outside of the channel, and I'd expect a little rally up for Wednesday. I would think anyway. Monday and Tuesday, we've had two up days. I think Wednesday we could go a little higher. Maybe get as high as the 200 bar moving average right here. I don't know if we'll go that high, but I think that this looks like a little bit of a buy opportunity and look for it to move up. So the bonds have bullish indicators. They've been going down lately. This is a reversal week expected because of the holiday. They've gone up for 2 days out of 2 days so far. So I say the reversal's taking place. Let's look for a third day higher on Wednesday in bonds. Next chart I'm going to show you is the transportation average. Look at this one, traders. Very nice. Remember I told you about that bull flag? Well, take a look at the bull flag that is forming right now in the transportation average, and that is the leader, as we know. So the Dow Jones Transportation Average, the leader of the U.S. indices, starts to build, I should say, it's not built completely, starts constructing a bull flag during a slow week, and the market should come back just slightly during the slow week. And if you notice, a bull flag is always slanted towards the downside. So it makes a lot of sense to have this bull flag filled in during this holiday week and then break out above it next week. The reversal being we've gone up, 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 then you have this flag filling in towards the downside, and then next week we come back and go up, up, up. That's the scenario I expect, traders, but we are day traders. We take this one day at a time, and what I'll do is I'll watch the flag, make sure it is a bull flag, and then trade it once it starts to break out of that bull flag area. Remember this as a note of caution. A bull flag could easily start morphing into a downward channel and just keep on going. So you can't always call a bull flag until it breaks out towards the upside. But if you monitor your technical indicators and watch the bull flag, you'll know which way it's going to go coming out of that flag. Rest assured, I'll be here to tell you. Anyway, traders, do your own homework. Take a look and see if you can find the bull flag on the transportation average. And then, of course, do not fall in love with the upside in bonds. We're looking for a one-day play. So, traders, you see those two charts? Hey, look, the bonds, it's a one-day play for the upside. I'm not looking for bonds to run away, but during a reversal week to have the bonds reverse and move higher makes sense. So we are going to look at that. No special play there. We'll see what happens if the bonds dip down a little bit. We'll see how it acts. As far as that transportation average chart is concerned, let's call it a bull flag for now until it morphs into something other than that. I like it. I think it's a bull flag. All right, traders. I don't know if I'm going to get to do another video between now and the holiday weekend. I will do my best to do one more because I am here in New York City and I want to take lots of pictures and show them all to you. So hopefully at the end of the next video we'll have a reel of New York City pictures. Can't promise you, traders, because I went to Manhattan today for a bunch of meetings, but it was pouring and windy and there was no way I was taking pictures of that. Hopefully I'll get to Manhattan again before this trip is over. All right, traders, so if I get to do another video, great. If not, have a great holiday. Take some time off. Go see the kids. Go smell the roses. Put your feet up. Go visit family. Relax. Have a great dinner. These markets will be here next week when we all get back. Traders, don't forget, never place a trade without a stop, especially in the futures markets. A stop is your best friend. Always place your stops. Always place them first. Keep your emotions out of trading. Do the best you can to do that. Remember that when your stop is in, your emotions should be put in check because you know what your risk should be now that the stop is in place. Traders, if you can't keep your emotions out of trading, then do this. Say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.